Yo guys, Leggy here and welcome to a new video. Today we're going to be doing the 16th week of the daily dividend pie. So what has happened this week? It's been an eventful week. So basically this pie decreased in value quite a bit, but looking at the pie now, it has recovered. It's still quite low, so let's jump into it and actually look at the actual figures. So at this current moment, it's sitting down at 4.95% down with a return of minus 69 pounds 25. I know there's been a lot of complaining within the sub, and really people say this is a really accurate reflection of the overall market, which means that if you've probably held anything for this duration of time as I have, most things would be around 5% down. So we're fine with it. It's an excellent opportunity to actually stick some money in, lower our average dollar cost average, and that's exactly what we're going to do. So although we are down, let's have a look at the dividends. We didn't have many dividends this week, but the ones we did get were quite big. Just broken the £10 mark, every little helps. It's just a slow building process. But yeah, no, it's really, really good. So what caused the major price action this week? So as I said, it dipped, it went down all the way to like minus 7%, my personal holdings, and then it jumped back up to 5%. And this is because the US debt ceiling talks are reportedly near agreement as deadline looms. So basically this caused, the stock market to pump, and the Nasdaq actually made a 9-month high. So yeah, it's been an interesting week because we have seen some significant price action, but all I'm going to carry on doing is loaning it up, dollar cost averaging, very long term, my investment strategy. So I don't really care what the price is this week, next week. Just want to say that. Although saying that, I think I have made clear that I believe there are optimal investing strategies. So let's have a look at a few ETFs which I'm invested in, which in all fairness, I did start buying after I was already about 3.5% down on this pie, just so it doesn't give an accurate reflection. But let's have a quick look. So we have got the VWRL, which we are in profit right now at 1.29%, so that's very good. We have got the VHYL, which is the high dividend one, which is probably most reflective of the pie. Well, as you can see, if we probably invested all our money into that instead of this pie, we would be slightly lower down. Although obviously, if you get the satisfaction of daily dividends, that one actually gives you quarterly payments instead of the daily dividends. So it's all up to you. And also long term, they say time in the market beats timing the market. So the best thing sometimes is just to literally wait it out. Just slowly buy in companies which you're absolutely happy to hold. But that's normally the way to do it, guys, really. But the old classic S&P 500, which is a benchmark really, because on average it gives a 10% return, and this means that the average investor actually can't outperform this. So normally it's just good to actually just buy the S&P 500 normally and just like buy that instead of investing in individual stocks. But this is what it's all about, to give you guys the opportunity to look at how different things are performing. So if we look at this one, it actually says that the S&P 500, so the distribution one, which I'll explain more in this video right here, but the distribution one, which we brought just about the same time as pie, is up 1.94%. So obviously we would be way better if we invested more money in that. But hindsight's a wonderful thing. And then we've also got the accumulation, which we brought actually on the dip. And much later, much more recently as well. And we are up 2.45% on that one. So yeah, but dividends are actually coming up soon for that one in June, I believe, at least the ex-dividend date. So that's going to be interesting. They're going to be reinvested straight in the dividends they come from. Yeah, guys, I think the market's in a good position. Will we see a lot more volatility throughout the rest of the year? Yeah, I definitely think so, especially because of the whole. You got to realise that Germany has actually fallen into a recession. So yeah, the global market has a lot of questions around it at the moment, and I think this will be reflected with high price movements. I mean, I won't bother trading it just because, I'm not good enough to time the market for that, and I'll just end up really losing out. But with volatility, there is a lot of opportunity to make a lot of gains by trading it. But as I said, I won't bother. I'm just going to stick to my long-term strategy, dollar cost average in, and then hope for the best long-term, because you can get really stung trading. So investing tends to be superior, in my personal opinion. With that, guys, I hope you guys did enjoy this update. Please leave a like and subscribe. If you guys aren't signed up to Trading 212, I'll leave a link in the description. I will see you guys next time. Peace.